Alright, what's up guys? In today's video, I'll be telling you guys exactly how money is made in the markets on an intraday level, right? And this is a fucking crazy course I'm about to make. It's completely free. And the way I got this knowledge is one of my friends, which I'm not going to disclose, pirated a course, which I'm not going to disclose, that cost him around $10,000. He just screen recorded, shared it with me, and I'm just going to give it to you guys for free. The only thing I want in return is for you guys to watch this video fully, engage with my content, right? Subscribe, like, comment, do all that stuff, and kind of help me out. And this is going to be a series, so it would be good to put on notifications, right? Because I'm going to be dropping constantly. I'm going to be dropping information constantly, all right? So let's hop on to the my board. So today's video, I'll be talking about these two. I'll be explaining the Federal Reserve. Wait, I'll be explaining the Federal. Bro, did you guys see that? Did you guys see that sniper fucking it was gonna headshot me. It was gonna headshot me, bro. One sec. I'll be right back. Extra layer of protection. All right, back to the video. So I'll be talking about the Fed and the money printing today, and why the markets actually fluctuate intraday when there's no news or whatever. So the first thing I want to explain to you is or what I want to hear from you, comment down below, is what is the difference between these two, right? I'll give you 5 seconds to comment. 5, 4, 3, 2, 1. Okay, so basically the difference between these two is, first of all, one is $1, of course, and one is $100. That's what it says there, 1 and 100. The figures are different. The way that the layout is different, right? They have different drawings on different parts, the color or whatever, right? But in actuality, the major difference between these two is the value that they provide, right? One is worth $1 and the other is worth $100. But one thing I kind of want to talk about is, before you understand how the markets work, is we're supposed to also understand that money in itself has no value. Okay, this money is being printed and it's not tied to anything. It's literally an illusion. Money is an illusion. If everybody today decided to wake up in the morning and say, okay, money has no value, right? They decide to realize, they all realize that money has no value. Society will crumble. Money would lose its value because it's built on the fact that everybody perceives that it has value. It's not tied to no gold standard. It's not tied to anything. It's literally being printed by the Federal Reserve. Money is being printed by the Federal Reserve, which is actually a private and a non-government company. They own the dollar and they're printing it out, right? So let's say you had a job that paid you $20 an hour, right? You spent 20 hours working this job, right? Working your ass off. You spent 20 hours working your ass off. You would make $400, right? That's a lot of money. But to the Fed, they could print that out in a second. And that's nothing to them. So money in itself is an illusion. It's a way. Actually, I'm getting ahead of myself. I'll explain to you guys that later. So you guys are probably thinking okay, the Fed prints out the money. So what? But the Fed in itself, let's look at this. In 2022, they printed out $9 trillion. $9 fucking trillion, which is actually 22% of the entire USD circulation. They printed that out in a year, right? And why would they do this? Why do we need to know about money, right? First of all, why is money a thing? Why do we need to know that money has no value? For the sake of this course, and why do we need to also print out money, right? What is all this? And the reason why all this happens is because of control, right? We want to control the masses. Not we, but the government or the Fed. They want to control the masses, right? Because if there was no money, then nobody would have any incentive to work. They would be all lazy bums. Okay, money as in itself is an incentive for people to contribute to society, and it's a good thing, but it can also be misused. For example, this whole printing out thing, printing of money. First of all, that's increasing inflation. It's gonna make people have to work a lot more shifts to make ends meet, and it keeps bridging, or it keeps making a larger gap between the really rich and the middle class, right? And it's also bridging the gap between the middle class and the super poor. It's a way to control us, and it's a way to use our time in itself. If you think about this, the way that money's tied. Money isn't tied to anything, but it's tied to our time. So our time is the currency that they're trying to get, because no matter how much money you have, you can't buy time back. So our time is the currency that or is what money's backed by, right? The time of the whole society that they put into it. Now I know I sound like a lunatic, and I have this tinfoil fucking hat on and shit like that, but this is a very serious thing that we need to understand before we go into the markets. Okay, so one sec, my phone's about to die. All right, so right over here, we see, let me delete all this because I'll explain this to you later. We see this is a chart that was just taking a picture, somebody took a picture and they sent it to me, right? Why is there, all this fluctuation? It's a random fucking day too, right? This was taken on January 25th. It's a random fucking day. But why is there this fluctuation in the markets? Okay, and because there's no major news or anything, right? So like let's say a presidential election, when Donald Trump was elected, we went to the moon, right? Crypto went to the moon because he was a advocate for crypto. The Nasdaq went to the moon. We hit all-time highs on a lot of stuff like the S&P and everything. Like we hit all-time highs, right? Because it was a major news event. But how come in like the intraday scale, when nothing is really coming out, how come we're able to move so like we fluctuate? Why do we fluctuate? And it's because markets are actually run by algorithms, right? And the way to decipher these algorithms is like you just got to understand the enigma. Now this is a lot of fucking words coming out, and like how am I gonna be? How can I back it? Well, first of all, join my Discord community. You'll see me calling out trades every single day. You'll see not only me, but my friends, my supporters, my followers. They're all calling out these trades, right? My students, because we understand how to kind of decipher the enigma. And I'll explain the algorithms and enigmas later on. But let's look at this right here, right? This was a liquidity sweep, right? There's probably more liquidity over here that we took out, kind of like. Kind of took it out like somewhere here. I don't know. I'm just assuming because there's this move right here, or maybe there's an order block or something. Boom, right? What happened? We kind of wicked into this fair value gap right there. Like we touched into it, right? We retraced back into this fair value gap. Oh frick! I cooked that. Try to make this look nice, or whatever. And we came into this breaker block. Right here is a really good short position because of all the confluences, which I will also teach you guys later on, or I actually have a lot of videos you guys could check out. But there's confluences that are showing us, and the reason why a lot of people think trading is gambling and it doesn't work is because they don't understand that time and price and order flow, they all have to be added up. So, and I'll also explain to you another thing about education, trading education, and kind of adding on to the gambling aspect of trading. But those are in the future videos. But yeah, they don't understand that time and price is something that is essential to the markets, right? You can't be trading. Let's say you're a support and resistance trader, right? You fucking smell. And but support and resistance does work sometimes, right? But you got to know the exact times that it works, right? Because there's a certain time when money is being moved through the markets, right? There's certain times when, let's say like the New York Open, right? There's a lot of money being moved through New York Open, or Asian session. I like to trade at 8:50 to like 9ish, or 8:30 to 9ish, because and I only trade Asian pairs. Keep that in mind. Because of the fact that a lot of money starts being moved around then. And that's when I start to see a lot of manipulation occurring, a lot of order flow, a lot of confluences being rejected or respected, right? And that's one thing we got to understand about this algorithm thing, is that it's time-based and order flow-based, right? Now, how long is this video? 9 minutes. No, basically 10 minutes. 10 minutes of straight sauce and yap. So I'm going to save this like more content for the future. Because I'm running out of ideas, bro. I've been fucking like making myself look like a YN and posting shit. Like, bro, what am I doing, right? If you guys did enjoy this video, please comment and subscribe and like. And also, I got a free Discord. One sec. Let me zoom into my face. I got a free Discord community. Link in description. You guys could join it, meet new people, meet like-minded people, trade. It's a really good community. All right. I'm not gonna screen share and show you. Because every time I fucking do, I scroll and I see some bullshit. But just join. See ya.